Josh, Liz Ann Saunders of Schwab Today tweets, U.S. consumers losing interest in spending money on several goods and services. Only topics where Google search activity hasn't declined are exercise equipment, telecom, and job interviews. Kroger today talks about big trade downs, airfares falling for the first time, customers talking about rising prices, housing prices are down, mortgage rates are soaring. What do you say?
If you're listening to the Fed, the question is which Fed, because what Powell is saying does not jibe with what the Atlanta Fed's GDP Now forecast says. That forecast says we are in recession, no growth in the second quarter. So we'll, by the time we get like actual clean data post all the revisions, it takes a while. But I've made this point on the show. I've been making it for a while. It doesn't matter if we're in a recession or a soft landing, because in the minds of the consumer, and the consumer is 70% of the economy, it already feels like a recession. It already feels like a recession. So it's almost like semantics at this point. We are in a slowdown. It feels horrible. The people who can least afford to be in an environment like this are obviously the people at the lower end of the income scale. And while a strong labor market has helped, I want to show you some markets that I think are going to have a negative multiplier effect that we will be feeling for at least the next 2 quarters, almost regardless of what the Fed does at this point. They actually can't even help here. We just had mortgage rates surge to 5.78%. That is the largest one-week increase since 1987. Yes, that 1987. Housing starts declined 14.5% from April to May. That is an enormous decrease. Single-family starts dropped 9% to an annual rate of only 1.05 million month over month. And why that's not great is really the only engine of the economy that we can rely on is the positive multiplier effect from new household formation. The demographics are on our side, but that's not working out if we're not going to build enough affordable homes, and we're not. And so now building permits fall another 7%. That's month over month. That's not versus last year. These are startling, almost overnight declines, echoed in the layoffs that we've heard about from Compass and Redfin, and there will be more. And so you see the home building stocks. You see DHI, you see Lennar, NVR, you see Pulte. Mm-hmm. They're all down somewhere between 5 and 8% today. But they're tiny stocks. Those stocks don't matter at all to the calculation of the S&P 500. However, the product that they sell is enormously important. And when you lose that aspect of consumer confidence and spending, when the home that they're in doesn't sell and when applications to buy new homes declines, a lot of ancillary spending in our economy goes away with that. So you're probably going to have a bust, quite frankly, in durables. If you bought a new washing machine in 2021, you're not buying one in 2022, obviously. So I think that is really important because we talk about this transition of the economy. Mm-hmm. We're going to go from items to services. Okay, that sounds great. The thing is, services are very small in the S&P 500 earnings. Durable goods and actual items that we buy are very large. It's just a relic of the way these indices were originally constructed. So if you understand that the few remaining areas where there's consumer enthusiasm, like travel, are really tiny for the earnings picture, then it's hard to say that having earnings up 8 or 9% this year is realistic. And what that ends up meaning is people coming out, cutting estimates, and you will see them start to say in 2 months and 3 months what I am saying now, which is that negative multiplier effects from high gasoline, from overconsumption over the last 2 years that doesn't need to be repeated, right, and from falling home values and home equity and stock market portfolios make it so that the idea of a soft landing really becomes laughable. And the longer this goes on for, the more laughable it is. So I'm holding out hope that it doesn't have to be 2008 or anything like that, but we've not seen the worst yet.